Alright guys, as you can see, I am in my attic right now. I'm very lucky. I have a nice tall space in here, which is great for what I'm going to talk to you guys about. So, how did I save $900 a year by using just one nail? Well, one nail in multiple spots, but one nail. Now, this might sound crazy, well, first of all, I look crazy. I'm in my attic, talking about saving $900 a year for one nail. So, I'm going to show you, with every house purchase that you make, you're going to require homeowners insurance on it. So, there are a couple things that go into that. You're going to need a clean 4-point inspection, and you're also going to need a wind mitigation. So, with the wind mitigation, there are certain things they look for, and there's certain things that can get you discount points. So, new windows, new high-impact garage, new roof, all sorts of things. But there is one little thing that can help you save $900, and I did it. So, I'm going to show you right now what that one little thing is. Okay, so this is a hurricane strap. Every house should have this. You notice how there is 1 nail, 2 nail, 3 nail. Now, say you just had 2 nails. A lot of roofs have only 2 nails in them. You're paying $900 extra a year in homeowners insurance. This one, where is it? One little nail right here saved me $900 a year in homeowners insurance. And that continues every single year. Okay, so how did I find that out? Because I knew the right questions to ask. I got my quotes for my homeowners insurance before I had my 4-point. Then, once I had for my 4-point and my wind mitigation, and then once I had those and submitted them, my insurance agent, who is awesome, quoted me $900 more than what he originally said, and I simply asked why. Why is it more? And he told me it's due to that one nail. 5 years ago, you used to only need 2, and now you need 3. So, there's a couple ways that you can go about having this $900 savings. You can, one, before you buy the house, you do have an inspection period. So that means you can actually go in and inspect your own home. So, I would suggest to anyone to talk to your real estate agent, have them communicate with the seller's agent, and set up a time for you to come and inspect the home yourself. Yes, you're going to need to crawl up into the attic, sweat your butt off, and try to locate those hurricane straps. Now, they're going to be located around every facet of this house, all around the frame. So, you're going to need to just find at least one of them so you can see if it has the 2 nails or the 3 nails. Say you have the 3 nails, you're good to go. You already have a $900 saving compared to most. Say you only see 2. There's a couple routes of action you can take. One, you can talk to the seller and see if you can go up and make the repair. 2, you can hire a company to come out and make the repair for you. Now, this is going to cost you between $900 to $1,000 to get this repair, but you got to think about it. You're already going to be spending $900 more that year, so you spend the extra $1,000, and you're going to save yourself the same exact amount of money every single year, though. So, those are kind of some options you have. Say you can't get anyone to do it beforehand. They won't let you up here. They won't let you do anything. Wait until you close. Then you can hire a company have them come out, have them fix it, and then get a new wind mitigation report done. And those only cost, $50 to $75. And once again, it's gonna save you money over the long run. I mean, things like that, they add up. $900 a year, I'll show you exactly how much money that affects your monthly payment. So little things like this can save you a lot of money in the long run. And it's just one nail. One nail. $900. Okay, everyone, so we're going to talk a little bit about that $900 you can save and how it affects your payment. But I wanted to show you one of my favorite tools to use, which is the Zillow mortgage calculator. And it's going to help you see what that $900 would do to your monthly payment. And it's also going to allow you to really break down all of the aspects that go into your monthly payment, so you can really see what that ending number is going to be for your monthly payment for your mortgage. So first thing is always the home value. Right now we're going to keep it at a nice simple $100,000. Hard to find a home right now for this price, but definitely not impossible. So we'll go to 10% down. Once again, nice easy number. You can put in anything. There's 5% programs, there's 3% programs. Some people just want to put in, say they have $5,500. That's what they have towards their down payment. And I'll show you the percentage too, what that equals out to. But for the sake of making it easy, we'll do 10%. It's got different loan programs. We're going to stick with the 30-year fix. That's pretty typical. This is another great aspect of this application, is that it's going to show you the interest rate for today. So it's going to give you the average interest rate, because those numbers, they fluctuate day to day. So it's definitely good to know what the average is, because when you're shopping around for mortgage insurance, or not mortgage insurance, for an actual mortgage, you're going to want to know this number, because if people start telling you something more than this, it's probably a good idea for you to shop around and talk to some other mortgage brokers and see what other programs are out there for you. So then we come to the private mortgage insurance. Now this is required on a conventional loan until you've reached 20% paid towards the total principal value. So that's without interest rates. Total principal, the principal is $100,000. So right now with the $10,000 down, you're at $90,000. Once you've paid another $10,000 towards that principal number, so you've gotten your loan down to $80,000. I'll show you what that looks like. That's going to be 20%. That PMI goes away. So one more time. Here you are, $44 in private mortgage insurance. Once you hit the 20, that goes away. Now that's not for FHA loans right now. They just changed that, where you're going to have that private mortgage insurance for the life of the loan. So that's something to think about when you are looking for a mortgage program. Should I go conventional? Should I go FHA? That's something to think about. It's up to your discretion. There are great FHA programs that really do help with down payments if you don't have a lot of money down, good interest rates. But it's definitely something to think about, because you will be paying that forever. And there are really great conventional programs out there. I shopped around for a while, and I got a conventional program with 3.75 down. So I can and now I can get rid of that mortgage insurance. So, but moving forward, we'll go back to the 10%. It's great. Also, you're going to have property taxes. This is going to give you the average property tax, for your location. I think there's a place you can, it just gives you the average. You can also go to the property tax calculator for your county. All you have to do is just search, Pasco County property tax calculator, and you'll get an application that will show you what the average is. But we're going to leave in this because this is pretty accurate. Now, homeowners insurance, this is great. It actually auto-generates for you what the average homeowners insurance is going to be. But this number can really fluctuate. It depends on where you're located, what you have going on in your home. There's a lot of aspects. So, we're going to go back to the nail now. So, $700 right now is what you're paying a month, which is great. That's really cheap. I mean, if you can have this happen, you're sitting real pretty right now. Now let's just add that $900 more. $75 extra a month. Now that may not seem like a lot. Okay, 75 bucks. That's a month, whatever. I can pay the $75 a month. That's $75 a month for the life of the loan. $75. Now, let's say you get up in there and you do the work and you take my advice. You're going to be saving $75 forever. You might have to pay someone $1,000 to get up there and fix it, but it's so worth it. I mean, you're going to be saving immediately saving in the first year what you're spending. So, I mean, and say you don't have the $1,000 right now. You're going to put 10% down. Put 9% down, $18 extra a year. You can still save the $900. I mean, and you're still saving money. So, I really hope that this tip helps you guys out when it comes to buying your first home. It's all about being educated. It really is. A lot of people can get stuck in a situation where they aren't making the best choices. They don't have someone there with them helping them. So I would love to help you. I'd love to. I mean, this is why it's really important to have an educated real estate agent working with you that can share this information with you, that can look over all of these numbers and make sure everything is adding up, because you can lose a lot of money real quick if you just don't know what you're looking for. Thanks so much for watching, guys. I really hope that this video will help you out. I'm gonna be doing lots of great tips like this, lots of great information for you guys, and just trying to make it fun for you. So I really appreciate you watching, and if you have any questions or if you just want to reach out to me, please do. You can leave a comment down below, or you can check out my website and contact me from there. It's www.floridarealestategirl.com. So yeah, thanks for watching. Say bye, Jackson.